And Andy's here. Andy, we're going to talk now about mortgages, because one of the biggest mortgage lenders is offering mortgages worth up to 25% more than the value of your house.
Yeah.
It's not a recipe for something or other.
Well,
What's the word?
At first sight, it looks like, well, isn't that reckless? Isn't that
Here
what
they go
Northern
again.
Rock were doing
Yeah.
in the credit bubble? But this is different. You can only get this if you're in negative equity and you're already a customer of Nationwide, who've become the first to offer this sort of thing. Now, Nationwide, if you're a new customer with Nationwide, they'll only give you 85% loan to value. Just to explain what that is, it's self-explanatory in a way. It's the value of the loan compared with the value of your house. So your loan can only be worth up to 85% of the value of your house if you're a new customer. But they're saying if you're an existing customer, well, they'll give you a loan worth up to 25% more than the value of your house if you're in negative equity. So you can move. Let's talk to Jonathan Davis about this, who's a chartered financial planner at Armstrong Davis, the wealth manager. What do you reckon?
I think it's stuff of nonsense. The banks and building societies messed up the lending in the credit bubble up to 2007, pushing debt down people's throat ad infinitum, and look at the mess it's put us into. And here we are, irrespective of a spring bounce in house prices, our view is that house prices are still on the way down big time, and they're lending more than the value of a property which is going to go down even further.
Yeah.
It's a joke.
Well,
How do you know it's going to go down even further?
Because the macro position is still horrendous. Unemployment is rising 100,000 a month to the end of the year, 3.25 to 3.5 million by next year. Government debt is the biggest ever. Taxes are going to go up after the next election. Public spending is going to fall. Household debt is the biggest ever. Commercial property bad debts are about to become left, right and centre.
That's what's happening to the market. But
What's
in
the good
the meantime, people actually have their lives to lead, don't they? And you're trapped if you're in negative equity. If you want to move, for example, you might get a promotion to a better job in another town in the UK. It would seem silly if you're prevented from taking up that promotion by the fact that your lenders say, no, you can't move. Nationwide would let them move.
What is this fixation that the only way you can move is by buying another property with a huge debt? You can move by renting another property.
Often you can't get the rent to cover your mortgage, often.
You can't get the rent to mortgage. You mean you're an existing mortgage? Well, if you're going to make a decision to take this new job in your example, then you're going to do whatever you need to do.
But this frees people from the trap of negative equity, Jonathan. In the early 90s, the banks, after all, they took an interest in what your property was supposed to be worth when they lent you the money. Here, Nationwide saying, yeah, we'll take a risk. We'll lend you more than the property's worth because we acknowledge it was partly our fault that you got into negative equity in the first place.
First of all, they're not freeing you from the trap of negative equity. They're putting you bigger into negative equity. Secondly, they're not taking a risk at all because the borrower takes a risk. They can hound you for 50 years until they get the money back.
But, Jonathan, negative equity, as you know, isn't a problem if you can keep up the payments. Now, if people can show that they can keep up the payments, they could be unnecessarily trapped in their house, prevented from moving and taking a better job, unless lenders like Nationwide are willing to be flexible with them.
Well, again, it's not really a case of being flexible. Have you seen the interest rates they're charging? They're charging about 7% for this product. It's an awful lot of money when normal fixed rates are around 5 or 6%.
But I would be happy to pay a higher interest rate if it meant I could get on with my life and escape a no-job town, move to a town where there's jobs.
Well, you're assuming that there's jobs. The fact is unemployment's rising 100,000 a month. Sure, if it's an individual decision, if the individual thinks it's the right thing to do, then should do so. But I think it's irresponsible of the Nationwide a so-called prudent lender making available 125% mortgage.
OK, thanks very much. That's Jonathan Davis from Armstrong Davis.